All right, folks. I'd like you to take your seats. We're going to get started with the next panel. I'd like to welcome Jason up, who's moderating the panel. And Jason, you can take it from here. All right, folks. Please wrap up your conversations. We are going to kick off the next panel.
Welcome back, everyone. I hope you've made a new connection and all right, so this panel is going to explore market decentralization from the perspective of the worker. And when I studied labor economics and the labor market, it was 25 years ago. And the kind of prevailing wisdom was that automation and globalization was going to kind of unfold the traditional American dynamics of organized labor. And I think we're at a really interesting inflection point today. And the kind of factual landscape I want to set for our discussion is we're at a moment that many predicted years and years ago, wherein more than 50% of the American workforce doesn't receive a W-2 paycheck, but rather has cobbled together some 1099 income as an independent contractor, freelance worker, many call it gig work. And we're seeing the resurgence of organized labor to build power within the large legacy institutions and sectors of the economy. And those very dynamics, those very fights are about the topics we have already started talking about today. To whom go the spoils of the AI revolution? To whom go the spoils of automation and outsourcing? And on our panel today are folks right at the intersection in the field working on building labor power, creating voice and access for workers, not just in the US with all the labor force dynamics within a region or within a country, but really around the globe, and looking at this from kind of a global landscape. I'm going to dispense with traditional intros. You can read them in the bio packet. I've asked our speakers to prepare a provocation for our session to revisit a question that isn't going the way they thought when they got into this work, or to address an observation they have that is forcing them to reconsider and rethink the work that they're involved with. Alyssa, I'd like to start with you, Alyssa Orlando. What is kind of nagging at you that isn't panning out the way you thought it would?
Something that's really nagging at me is, can we have both money and power? So when I juxtapose my two experiences, I had this 100% worker-owned cooperative. Didn't have a secondary market because it was going to be perpetually worker-owned, so basically no enterprise value. Wasn't paying dividends because it was a startup and wasn't profitable yet, and resulted in maybe $3,000 to $5,000 in increased wages for each driver. I compare that to what I'm doing now, which is a search fund, which is basically micro private equity to buy and run a company, and we'll be allocating a 10% equity grant to workers, which results in $50,000 in enterprise value for the 70 employees day zero. So which is a better model? Which is actually optimizing what we want?
John, you come at this from a different vantage point in health tech and Web3. What's a nagging observation or question that's forcing you to reconsider some of the strategies and designs that you've been thinking about for a little while?
Well, we're currently actually right in the throes of governance discussions and what that actually is supposed to be. When we first started Opolis, it was, well, if you come from Web3, we might call it an employment DAO. If you come from Web 2, we'd call it a digital cooperative. So depending what's your flavor, choose your own adventure there. The original idea was to like actually have the community deciding a lot of the major decisions around like what health plans might actually be good, or what. There's a whole bunch of things that might be involved in that, but like the further we've gotten down the road, not just voter apathy, but just like most of our members don't know anything about this subject matter, right? When you talk about evaluating an actuarial review of a health plan, they don't know anything about that. They would literally would have no way to even weigh in meaningfully on that. So then it goes to like, okay, well, then you start looking at everything else and it's like, it's kind of the same. So there's an expertise component that's missing from the larger community who actually really just want to have the services and consume what they're doing. Like, yes, they want to participate in profits. That they want. But when it comes to decision making, we found that they don't really care that much. So it's like, okay, well, then what do we do with that? How do we actually maintain the benevolence? If they're not going to do it for themselves, fine. But then who does it, and how do we maintain that structural benevolence that we talk a lot about?
Thanks. And Gabriel, nice to have you join us. Thanks for videoing in. What's a nagging observation, trend, or question that you have in your work that you're currently in the throes of reconsidering some conventional knowledge or belief?
Yeah, well, one of the inspirations for us starting to research is actually an observation after investing, advising, and consulting with probably 40 Web2 marketplaces, including the likes of Uber. And when you look at those models, you see that they were, they became extraordinarily valuable for 10 people who became billionaires. And then you saw that they effectively pushed down the minimum wage for the average driver, so the drivers taking out their cars. And that's kind of endemic in all of these Web2 networks. What I'm actually really interested in is seeing how AI will actually feed into the lower end of all labor marketplaces. When you look at things like logos, data entry, the kind of lower end tasks that will be automated at the lower end of the labor market, where will that kind of push global freelancing and global labor? Like, I'm really curious to see how that plays out and impacts the businesses in the labor market, like Upwork, Fiverr, et cetera, where a majority of those jobs, can be done through the LLM.
So historically, labor markets were limited to factories, or at least historically, I mean 20th century, not 21st, where marketplaces were maybe regional, citywide, largely kind of differentiated by skill, training, but took place in some proximity. And the prior panels have really kind of opened up our awareness that the marketplaces in which labor is currently being transacted and practiced is global in scale. I want to try to delve into some of those dynamics and explore the various effects that global marketplace participation is having on folks within the same skill set or genre, maybe at different ends of the skill scale or different parts of the world, and focus on how these marketplaces are being optimized for whom, for whose benefit. John, I'm going to start with you on that.
So we built a platform that's pretty agnostic to, as long as you fit in a certain box, which is really, I just need to cobble together enough income to qualify for an FLSA minimum wage standard in whatever state you're in. We're in some international jurisdictions as well. So we don't really particularly care or cater to any particular skill set. We've tried to kind of create a completely egalitarian platform that just lets the person just opt in. And how they conduct their business, when they conduct their business, with whom they conduct their business, we try to stay out of that stuff as much as possible. We see ourselves as more of a platform utility that just allows people they can opt into certain permissions without needing to be permissioned to do it, right? So we're just opening the gates and the doors to certain things like benefits and proof of income, whatnot. And so for us, what we watch though is we do see the people who are willing to really go full-time freelancer are typically more educated, that have the income. There definitely are gig worker pools that are side hustling and doing a lot of that, but the full-time ones we find are lots of software developers. We see a lot of professionals like independent nurses and chiropractors even, We see, I mean, real estate agents is an obvious pool of large independent workers, mortgage brokers. I mean, there's a ton of professional categories that exist in this world where it used to be that they would work in these clustered offices, and now they're just going off on their own. And this trend we've seen quite a bit. Tech and software, even more than we've ever seen. With these layoffs that recently happened with a lot of the big tech firms, a good portion of these folks are never going to go back to a W-2 world. They're not interested in that anymore. They've been rugged to full-time, or a few times you could say, and it's just not in their best interest to be doing that. So when they have options to work globally and they can work remote from home, well, then what does it matter where I can get my income from pretty much anywhere. So why would I want to be beholden to somebody else? So that trend, from my view, is going to continue, and you're going to see it continue to come down the skill tree. And there will be a certain, next generation revolution of automation with AI and other tools that some roles are just going to get eliminated. But for the most part, I wouldn't be surprised if we have, well, the prediction is 90 million of 160 million will be full-time, independently working by 2028. So that's in less than, 5 years? It's coming, and it's going to happen. So the option to choose into it, though, is I think the main difference. Most people up to this point, to go independent has come at a huge cost. Finding work has been hard, which is why new next generation labor marketplaces like Brain Trust matter. But tool sets like Opolis and other, functions and, just administrative tools that they don't have matter a lot. And as we were talking in the hallway, no one's actually prepared for that. Most BPO services are all B2B. There is no retail market for this stuff, which is a huge greenfield opportunity for technologists and tool makers that are coming into the space.
Alyssa, can you talk about your experience with global marketplaces and the competitive dynamics?
Yeah, I think a lot of the platforms I have worked on are still very place-based, right? You need to be in the city to deliver the food, to pick up the rider, to paint the nails, to cut the hair, to dress the wound, right? And yes, some work can be done remotely, but we are very much working with people who live in the same cities as we do and have to actually complete the work. I think within the 1099 workforce, there is this massive bifurcation of choice. I have been self-employed by choice for the past 7 years. Someone who, we talked about Google earlier, right? The people on 1099 contracts at Google who are cooking the food for the employees with stock plans, who are cleaning the floors of the employees with stock plans, have not opted into a 1099 model. And I think we really need to draw that distinction, especially when people are working in the exact same geographies. And it's not labor arbitrage, it's classification arbitrage.
Can you expand a little bit on that before we move on? I want to.
Yeah, so with W-2 workers, you have certain rights, right? You have rights to, if one person in the company has a 401k match, everyone needs a 401k match. If you're over 200 employees, you have to have company-funded healthcare. The second you're on a 1099, all of that goes away. Your right to paid days off goes away. There are so many rights that just evaporate just by changing what tax forms you receive. And I think there has been a lot of heat on this on large companies like Uber, and we haven't quite mastered if you own that company, can you still be a 1099 worker? That's something we faced at the drivers cooperative. Is this legal, what we're doing? I still don't have an answer to that. But I think that classification bifurcation is how we've stripped a lot of people of rights that were already in place, and the ownership conversation is just pushing the rights even further.
Well, get comfortable, because I've pushed our panel to really lean into these tensions. There's going to be a lot of opposing and interesting differentials and points of view. Gabriel, can you talk a little bit about your experience with and observations around the competitive dynamics in the labor markets that you're working with?
Sure. So, one of the things that we considered when we were first starting Brain Trust was both as an investor and as an advisor. As an investor and as an operator, was creating a user-owned model had to not only be better for the people in the network, but it had to enable what we call a new community. By dropping fees as close close to zero as possible, like we need to create a new market versus essentially just fighting it out with the existing incumbents. So our belief was basically by dropping the fees to zero for towns and giving away ownership as widely as possible to towns, and then dropping the fees as close to zero as possible for companies, we could essentially enable a whole new class of transactions that never touched the traditional labor marketplaces of the last decade. So as an example, if we look at, let's say, Upwork, which is probably most well known, I think their average job size is currently about $280, of which they take approximately 30%, sometimes upwards of that. And so by dropping the fees as close to zero as possible, the talent makes more money, but also, it attracts companies that want to hire. And so to contrast that with what we found is our average job size currently is $92,000 in climate. And so I think that that's one of the impacts of having a user-owned model, is that if you have a user-owned model, why would you charge yourself exorbitant fees? And when you don't charge yourself exorbitant fees, well, then you enable a whole new class of transactions that couldn't exist on these other kind of high-fee markets. So I think that the balance is when you can do both, when you can create a model that is more fair and equitable to the users, but also that has significantly better financial incentives. And that's, I think, the nut to crack for many other marketplaces that they're going after this, which is that it has to deliver a better experience to both sides and significantly better, financial outcomes for them. And I think that's one thing that a lot of folks that's really what they focus on. On our side, what that's enabled us to do is there are 450,000 freelancers across 157 countries without spending any money on marketing.
If the historical premise for today is that the bifurcation between labor and capital under a neoliberal kind of policy framework has created and accelerated wealth and income inequality, I think the premise of the prospective conversation here is that if we simply harness the incentives and forces of capitalism and share in the attributes of ownership more widely, that we can correct some of that. And I want to probe at that premise because it's one that I'm personally re-evaluating myself. And as operators of labor marketplaces, I want to really probe at the extent to which giving workers voice and ownership in these platforms is driving the outcomes that you initially set out to address, and to what extent those aspects of ownership matter to the workers on your platforms. I'm going to start with you, Gabriel.
Yes, I think that, my observation is that, well, I'll talk about like some of the overall observations and some of the more like kind of granular observations that we've gotten into. So one of the things that I thought was going to be way more effective when people started, I thought people were going to want to join to earn tokens. So let's say that I believe that people had more like mercenary tendencies. Turns out that actually people have more like missionary tendencies. The reason that they want to join and own tokens is actually because they want to help their friends get jobs. So that was a really interesting dynamic for us. So like we definitely learned that part in the early days, which was people wanted to earn e-trust token because they wanted to help their friends, not because they necessarily wanted to cash them out to US dollars. And that's essentially played out for the history of brain trust. The percentage of people that have earned tokens that have actually like they could go and sell them on Coinbase today, but that behavior does not happen. So I think there's this like inherent desire to continue to be part of something bigger than yourself, and to be part of owning and governing a network. Whereas many of these freelancers or individuals around the world, especially if you don't come from the United States, if you're in Pakistan or if you're in any of these other places around the world, you've never had that opportunity. You've traditionally been a labor class, and now this is your first opportunity to be part of like an ownership class or governing class. And so that part has been really interesting to watch, just actually watching the metrics of the percentage of token holders, at least 450,000 people, that are actually like taking their tokens and they're selling into the local currencies or Bitcoin or Ethereum or something like that, that percentage is incredibly small. So I think that's one of the interesting, kind of surprising thing that I found.
Thanks. Alyssa?
So something Gabriel said that really resonated with me is ownership is about the combination of experience and financial incentives. And I think something I learned by starting a worker cooperative is it sucks to run an undercapitalized business. I think something that you mentioned is that the ownership economy is the answer to dignified work. And it really breaks my heart that I've never seen more unpaid or underpaid work than in the ownership economy. And I think that needs to change. We need to recognize that if people are going to create businesses for collective benefit, we can't ask them to take individual risk. And that's why I really like models whereby you can get capital up front. Like Brain Trust is raised from venture capital. The DAOs we were speaking with in the last panel raised from venture capital. Like, how can we figure out how to create personal incentives for the people doing the work, make sure these businesses are appropriately capitalized, and make sure that the majority of the benefit goes to stakeholders? That's the nut I haven't cracked. And that translates to things like slow response times and customer service tickets. That translates into buggy apps. That translates into long pickup times that are a pain, right? These translate into things that really do matter for the owners that we're trying to optimize outcomes for. So that's really the nut I want to crack. And then the second piece is that in the previous panel, it was mentioned that people make decisions for largely themselves, and they do want to be part of something more. That's absolutely true. But, workers aren't a homogeneous force. When we had board members, a lot of times they would be making decisions in the interests of themselves, their careers, their ambitions, their friends. There was horse trading that went on. There were personalities that came to the fore. And so how can we be proactive in creating positive cultures while acknowledging that self-interest is real, no matter where you come from?
Can I tag on to that part just to reinforce something that you just said?
Sure.
When for those that are like, I often get this question, like, what are the next labor marketplaces that are going to be attacked? Like, how come they'll be done for this? And one of the criteria that I've used historically has been one, or there has to be like extractionary rent-seeking behavior, right, by an incumbent, right? So an incumbent that takes the disproportionate amount of fees from the marketplaces, right? So you can see a lot of that sort of behavior in Web2 marketplaces. And one of the other things is that there needs to be a very low NPS experience. So oftentimes people will use like DoorDash as an example and say, oh, how come nobody's done the user of DoorDash? Well, the reason is that if somebody ordering DoorDash, it's an incredible experience. And so it's very hard to imagine like building something that's user-owned that's 10 times better than that experience. So for those in the audience that are really thinking about like what are the next categories, a good place to look is like I agree with extractionary rent-seeking behavior, and also where if you drop the fees, you enable a new class of transactions that couldn't touch one of those marketplaces, i.e. larger transactions. You couldn't touch those. And the third part is essentially like an experience with low NPS. In ours, we had low NPS on both sides. Like a labor force really hates the operator in one of these other labor marketplaces, like an Upwork or a place like that, and also the company. So when you get all of those things together, you end up with a really good shot at actually disrupting the incumbent marketplace.
Thanks for that. John, in the hall, you kind of were candid about some of your experience in the aspects of ownership that your marketplace participants care about. Can you talk a little bit more about that and what ownership means to your members?
Yeah, well, I think it's going to evolve. I think to echo some of Gabe's sentiment about tokens, when we first did the work token launch, we're actually not listed on Coinbase. We're intentionally not creating liquid markets because our token is a unit of account for distribution of patronage. So based on how much of the token you own from a percentage standpoint, that's the percentage of patronage dividend that you'll get. You know. But we figured that people would care more about that because it does actually translate to profit. You call it what you want, but you get a return essentially, or you get a discount, and depending on how you want to look at it, you get money back. And we figured people would really care about that, but they don't yet because there's no profits yet, right? So being a startup, no one's expecting a profit at this stage. Even our investors aren't. So although we have designed a game that aligns the incentives of the individual contributors, the labor, and the capital. So that's the nuance, I think, of Web3 that we don't talk enough about, is it's actually not pro-labor, screw capital. It's actually mutualism. Like, how do we create symbiotic outcomes that actually, from a game design standpoint, is durable to both benevolence and economic sustainability? How do we do both of those? But it's interesting, like I mentioned before, they don't really care about governance. They do if like you kill the health plan they don't like, that they like, if you kill that, then they care. But like, as long as you don't mess with anything, so as long as there's a baseline of benevolence and things are being done down, legitimately, they don't really want to be involved in that. They do care about economics though. And I think that when you talk about worker-owned co-ops, I think being underfunded is a systemic problem. Because in V1 of worker-owned co-ops, it's all about the worker, and there isn't this mutualistic sort of like, how do we actually work with capital to like create sort of beneficial outcomes for everyone? Now in Web3, we do that. We're actually re-engineering economic models to actually do that and create those outcomes intentionally. And we're thinking about the durability of these models over time, and we're thinking about incentives and behaviors in the context of the models. We're doing all of these things. We're like role-playing these things for years. I mean, I think we did ours for like 2.5 years. We were messing around with this, like figuring out different things. And I think in the end, it's going to be, the recipe is going to be, well, what motivates capital? Returns. What motivates individuals? Returns. Economics motivates everybody. How do we design the games to actually create these sustainable, durable models that economically create outcomes that's positive for everybody who's contributing in an appropriately proportional way? So for example, somebody who just shows up shouldn't get paid a bunch. There should be contribution-based. So if I'm in a driver co-op, but if I'm doing a ton of rides and I've got a high NPS score or my rating score is high, I should get a good portion of the profits. But then we should figure out a way to get capital to come in and help support these networks in a way that isn't exploitive and over-extractive. So how do we do that? That's the nut that we're cracking. So you want to talk more about that, I'm happy to do it. I do it all the time.
Well, I do want to get deeper into the economics conversation, because we're going to talk about a tension between what I might call the transactional economics, the benefit that the product of the product that the member is seeking, and kind of the profit-based economics, and to what extent those two things might be mutually exclusive or complementary. But before we do that, I want to highlight the resurgence of organized labor, because I have this wildly idealistic dream that we're seeing the kind of dual creation of this bridge between an ownership-based economy and a power-based economy. So the historical context for organized labor was a very deliberate policy choice at the turn of the century through the 30s to develop a collective bargaining system that was adversarial, and it was based on collectivizing worker voice to extract gains from capital-driven management. And today is really all about, well, what if we bypass that and create wealth and access through ownership, and just bypass the need for the spoils of collective bargaining? And I think about the present day labor disputes, both the auto workers and SAG-AFTRA, talking about how are the spoils of AI and other automation going to eventually trickle down to the creators of value. And I see the potential for some cliff at some point we've talked a little bit, some of that work will get automated. And so there'll be, most of us will just be sitting back having contributed to the genesis of the invention, but never participating in the marginal creation of product. And so my question here is, what role does organized labor play? What role does the resurgent voice of organized labor play relative to the economic benefits that are meaningful to workers today and that we think will become more meaningful as this train of automation continues to accelerate? Alyssa, I'll start with you.
I am hugely bullish about the opportunity for unions to seed cooperatives. We have models, we just have to scale them. So SEIU, HEW in California seeded Allied Up Cooperative with $5 million. That's enough to really start a business that does staffing for allied health professions. The Teamsters in Maine provided, I think, $1 million in seed capital for lobster, fishers, catchers, farmers, and they massively drove up the price of lobster. So, and it's like additional earned revenue for unions. So is there really an opportunity for unions in high priority sectors to seed or buy companies that they're trying to organize and ensure that all of those worker owners then join the union and pay dues, obviously like through an election? But I really do think union money can seed the next generation of at-scale worker cooperatives.
John?
Well, I think that adversarial collective bargaining is a tool of the past, to be honest. I think legislative mandates like AB 5 in California that's supposedly designed to protect workers, nobody really asked the workers who they want to be a W-2 of. Like a lot of these platforms that they work for weren't designed. I don't want to be a W-2 of that guy and be told when to work and how to work and how much hours I need to put in. Like this was supposed to be a gig thing. So I think it's the right problem, but the wrong solution, where you get these advocacy groups that are in the hostility. We're not building mutualism. So I think it's a root problem. I think it's the design of our economic models and our distribution systems. I think our ownership models, even the fact that we can't give, like Airbnb wanted to give stock options to its hosts at one point. They weren't allowed to do that, right? So we got securities laws issues. We've got other issues. This is why tokens are so attractive to a lot of us, that it's sort of, even though we're not trading in securities, co-ops have a slightly different form of ownership. So we're just using the co-op distribution mechanism in a highly fluid way with a token to actually replicate the same function of ownership, of profit sharing. And so we're trying to figure out ways to actually put these economics in people's hands more quickly, and to do it with this long tail sort of durability and sustainability approach, and really considering the economic players and all of this. So I think the old saying that what got us here isn't going to get us where we want to go is true for the political landscape around collective bargaining. I think we've just gotten to a breaking point, so to speak, where we just need to come up with new ways, and we've got to fix the game. That's what I'm focused on doing. Instead of screaming at capital that they're unfair and they're treating people badly, I don't disagree, but they're playing the game as designed. In a C Corp, it's their job, fiduciary duty, to maximize profit on behalf of their shareholders as directors and officers. So why do we hate them? They're doing what they're supposed to be doing in the terms of the game that they're playing. Is it right? Is it moral? That can be argued. But I'm saying let's get new games. Let's actually create new games that actually align incentives amongst the different players so that we can move from a scarcity-based society to an abundance-based one. And if we have economic games that drive those outcomes, then we all win, and we don't have to piss and moan over it like we do today.
Gabriel, what perspective do you have on the resurgence of collective bargaining, organized labor efforts?
Yeah, so my first perspective is it's clear that this, I'll say like this form of like extractionary capitalism is has gone a little too far, right? When you look at the disparity between workers' income and CEOs' income as as an example of that. But it's clear that that is becoming more and more unsustainable. My observation, like as an investor and operator in Silicon Valley, is that the new things oftentimes don't come from the old things, and they don't look and smell like the old things. And oftentimes, in the beginning, they look like toys, right? They look odd and weird, like something like a token is a great example of that, right? Like a token doesn't look like equity. It's not meant to look like equity because it's not equity. And it looks like a toy, and everyone kind of treats it that way for a very long time, and then you start to see, wow, there's some really interesting things that you can do with this that you couldn't do with equity, for instance, like these examples of Uber or Airbnb, right? Like imagine a world when Airbnb and Uber, when they were first formed, more than 50% of the cap table was programmatically given to the drivers or the renters by opening up their homes or opening up their cars and by earning 5-star reviews and inviting more people to join the network, and those people are in 5-star reviews. The brilliance of these new toys that we call tokens is that you can program incentives within them. And you can program those incentives to align the interests of everyone in the network. And then guess what? You can vote as a group of people to amend and adjust those incentives as time goes on. So that gives you a whole new surface area for designing incentives that align participants in a network that we haven't experienced before. And that the blunt instrument, I think, that was used before is something like collective bargaining. And that has served its time, and it has done a lot for workers in the past, but I don't believe that old thing will be the way in which we build cooperatives, really build networks in the coming decades.
I think to push back on that a little bit, though, there's always going to be amazing incentives for early adopters because they're getting the investors what they want. So I was at Uber in 2016, and drivers were making 35, 45, 50 bucks an hour. They're making a lot of money. And then investors said we need to push towards profitability, and there were 35% wage cuts with 2 weeks notice across the board, and people started picketing outside. They were not organized. So what did we do as management? We said, thank you for your concern. What else what other power do they have? Yeah, some people tried striking, wasn't really effective. Demonstrations weren't effective, protests weren't effective, strikes weren't effective. And so this is where, maybe to contradict my earlier point, structural power matters.
Yeah, so I agree with that point. Let's build on that. It's a really interesting conversation. Let's use an example. So all of these networks and marketplaces, Web2 marketplaces, essentially, if they're lucky enough to kind of break through, right, or break orbit, they follow this exact same pattern of going up the S curve. And as they do that, as they get closer and closer to going IPO, they need to extract more and more and more value. Right? And then post IPO, if you go and listen to all of their quarterly calls, it's all about how do we extract more and more value from the same user base, right? So it's a fundamental flaw in the business model, which is that as you have a rent extracting middleman that is incentivized to extract the maximum amount of fees, what that does is it kills the network effects and it kills the community, right? As you extract more and more fees, it kills the community. It's just happening on a time horizon. What's different about a Web2 or Web3 network would be that one token equals one vote. And so in that case, right, if you wanted to raise fees, let's just use an example. Let's just say we wanted to raise fees. Everyone in the network would have to vote to raise fees. And why would a user on the network, why would the users vote against their own self-interest to raise fees on themselves? It wouldn't happen. And so I think that would be a contrary point to that, is just having a user on Uber that didn't have voting rights. Well, that wouldn't work very well because those votes wouldn't be worth anything.
we're going to have to leave this part of the conversation here, and hopefully folks can hit up the speakers at lunch. I want to leave room for maybe 2-3 questions from the audience. We've got about 5 minutes. Michael?
So there's definitely allusion to the idea that you can align stakeholders through tokens, through programmatic economic policy. And I think in some circumstances, alignment can be significantly improved. But I think it's also important to understand that in like a heterogeneous ecosystem, even in worker-owned one, there are going to be differences in preferences across the actual decision horizons. And so I'm kind of curious how any of the panelists feel about how these systems actually deal with or reconcile actual differences in preferences across the stakeholder groups that are the constituents of those systems.
Well, I have some opinions on this. I think limiting your stakeholders to as little diversity as possible when it comes to goals and outcomes is helpful. The more people you have in a platform, so when you talk about like what we do is employment based. So most people who are consumers of our platform really kind of want the same things. They want low cost, high quality healthcare. They want cheap services to administrate their business from a shared services standpoint. They want a variety of products outside of that might be ancillary to their employment experience. And they want it to be set it and forget it from a UX standpoint. They just want to be able to like push some buttons and then just let it be. Right? So they want some pretty simple things. Ours is pretty simple. I guess it depends. If you have a complex set of products or services and you've got lots of suppliers that have different supply chains or costs that go into the mix, or their services are being procured in some way that might compete with somebody else that has a different incentive that might be also contributing to the pool, it gets difficult. So I think what you're going to see for real durability is you're going to have pretty linear services models where they're going to be pretty narrow in scope, because if you have too much diversity, it's just bumper cars and it's just not going to work. But I think in terms of the platform economy, which was really started with Uber, I think your point is absolutely. I actually use Uber a lot to illustrate what I call the tragedy of the boardroom, which is a new take on the tragedy of the commons, but it's really where the whole kumbaya culture from the very beginning of these companies pushes towards profit, right? So they say, well, we've got to maximize profit now because we got to go public, and then it's all about stock price, which is what Gabe was talking about. So the model it's a feature, not a bug. It's terminally toast before it even got started because of the legal framework that it was built in. So yes, having organized power labor to fight against that's the old way of doing it. That's the only way to do it. You've got to have powerful resistance to it. But the new way is going to be these lean, slim, where you can scale stakeholders of one similar attitude that want a similar outcome, where you're not going to have a lot of problems with incentives. Now, that doesn't mean everyone's going to be homogenous and not going to want different things or different products. There's always going to be some debate about what should or shouldn't be done. But I think optionality is important in these platforms as well. So giving people as much broad choice as you can give them, and then make it as egalitarian as possible and let them do it.
One question in the back, Melissa.
So as I'm a long-term professional in my field, which is employee ownership. So I'm going to be vulnerable and ask just a really basic question that I hope others in the room also have. Why do you need a token for entitlement for distribution to patronage, for instance? Why not hard code it in the legal structure of the form itself, as it's been done successfully for decades? And that's not a loaded question. I'm genuinely curious about what the advantage is of a token versus the sort of the harder coded model.
Well, so inside the structure of the organization, I think it boils down to tradability. So I'm not talking about securities trading. I'm talking about tradability of my interest to another member. You can't do that in the current structure. So if I hold a bunch, let's say I'm an early adopter and I have an incentive to because I've stacked up a bunch of these work tokens, but I'm sort of like, I'm good. I'm gonna go do something else or whatever. I now have an asset that I could sell to another member. That's why you would do it. Now there's rules around this. There's a lot of regulatory things that we're navigating. There's a lot of uncertainty in the market about the legality of this, but we believe that inside the co-op, you would be able to transfer that ownership right. So that right to distribution, essentially, the patronage that I've earned, which is sticky to me, I can basically trade that to somebody else. That's why.
All right. Well, help me thank our panel and you all for a great topic, great discussion.
Thanks, Jason. So you guys, excuse me, we're gonna break for lunch and we'll be back in here. So you can eat out there, you can eat in here. We'll have a panel starting here at, I think, 12:45 during lunch. So